economist at Huntington Private Bank. He joins us from Pittsburgh. Olu, thanks very much for joining us. Let's start with those U.S. numbers, which are being applauded by the equity market. What's your take on these U.S. numbers? 151,000 new non-farm payrolls jobs added, slightly fewer than expected.
Yeah, thanks for having me. It appears, markets were expecting the worst given the interesting couple of weeks which we've had, tariffs and, the stop-start nature of the announcements. It looks like a decent report. Job growth was 150,000. We did get some negative revisions for the prior 2 months. Also on the positive side of things, we did see average hourly earnings remain at 0.3%. We also saw the unemployment rate tick slightly higher to 4.1%. So all in, it's a decent report. We don't think the FOMC will overreact to this data point. Job numbers are volatile on a month-over-month basis. And, over the past 3 months, job growth has remained decent. Something to point out is that, most of the Doge cuts were announced after the survey week. So the BLS survey is usually done in the week with the 12th of the month. And, most of the announcements came after that week. So, we will continue to, monitor the developments, looking at initial claims, looking at, layoffs and just listening to employers to just hear what's going on.
It's Brad Teicher. I'm just wondering, and you touched on it a little bit, but some of the Doge cuts and the sort of appearance that federal workers and hiring at least is going to be rolled back. I'm wondering what you think the outlook is for the employment picture in the next couple of months, and if some of this, like you mentioned, did not feed through for the February numbers, but if we start to see a trend develop, March, April, May, where the employment picture does start to weaken because some of the pullback in sort of fiscal and government workers.
It is a concern. It's a concern for the labor market. So we're calling for average monthly growth of 130,000 this year, down from 166,000 in 2024. And something to point out is that most of the job growth in 2024 was in the government sector, education sectors, and also the healthcare sectors. So, we think that, the more extensive these cuts get, they will start showing up in job numbers. Again, looking at initial claims and continuing claims, we're not quite seeing the cuts move the needle yet. But we think in the next couple of months, we're going to start seeing those cuts show up in job numbers. And again, it's a concern. It's a concern because the government sector and also, healthcare sectors were, two of the big job growth drivers in 2024.
What do you expect, Olu, from big U.S. corporations in terms of their capital spending plans with all the uncertainty that's going on now with respect to the trade relations of the United States with its major partners?
Yeah, so, we think actually the stop and start nature is actually worse than the actual tariffs because, if you know for sure, what's going to change, you can make your CapEx plans around that. But if it's constantly, one announcement today and another one tomorrow, we think that's going to weigh on lots of businesses. The anxiety and the uncertainty, will likely cause many businesses to wait on the sidelines. Several exceptions, just so many new announcements, and it's going to be hard for a lot of businesses to keep up with just all the developments. Again, it's been a very interesting couple of weeks. So, we're currently calling for slower growth in business investment this year. We think that if tariffs stay in place for a year, and again, if we continue to get this stop and start nature, we could see a decline in CapEx this year in 2025.
I'd love to get your thoughts on the Canadian economy as well. A miss on employment in the February numbers, but these Canadian numbers are even more volatile than the U.S. numbers are on a monthly basis. We have seen some Canadian economic indicators respond positively to the lower interest rates that are now here in Canada after several cuts from the Bank of Canada. However, of course, the economy is now gripped by the uncertainty regarding trade relations with the United States. What do you see ahead for the Canadian economy?
I mean, like you pointed, the Canadian survey is a volatile survey. It's a survey of about 60,000 households. We've actually started seeing the impacts of tariffs on economic data. So the S&P Global Canadian Services PMIs declined in February. Also, the manufacturing PMI also declined. But the BOC is more advanced in its rate cutting process compared to the Fed. So, that has been a boost to consumer spending and to the housing sector. But with the announcements of tariffs, again, we think that if, those stay in place, the Canadian economy will be at the brink of a recession. So, we continue to hope that there's some middle ground that's reached by all parties. Because again, it's going to be a bigger risk, particularly to the Mexican and Canadian economies.
Olu, thank you so much for your insight this morning. That's Olu Omodunbi, chief economist at Huntington Private Bank, joining us from Pittsburgh. Bryden, your take on the Canadian numbers.
Yeah, I think as you highlighted, it's always important to look at the mix between full-time and what full-time employment is doing versus part-time, because sometimes the net number doesn't necessarily tell the full picture. But I think, as we were speaking about previously, I think the feed through from some of the tariff uncertainty, I think, is likely to start hitting Canada sooner. I think that might be in some of these numbers, in the full slowdown in full-time hiring. And so, again, I think the Bank of Canada is definitely going to be, cutting rates a little bit more aggressively than the Federal Reserve. I think what's interesting, though, I think that some of this, with that backdrop, you'd actually expect the Canadian dollar to be weaker than it has been. And we had that day 2 or 3 weeks ago where there was almost, the first day of tariffs, the Canadian dollar had really sold off, and we've now rallied since then. And so I think the market is pricing in the fact that the Bank of Canada is going to cut rates more than the Fed, but the Canadian dollar is actually strengthening relative in the last couple of weeks. And so it doesn't mean that, the Canadian dollar has to bottom here, but you're starting to see a lot of that negative sentiment already priced into the Canadian dollar. Everyone is already negative about it. And so that's one thing that I'm watching, because yes, the Bank of Canada is going to cut more, but the currency is already starting to sort of tell a different picture. And I think for the Bank of Canada, or for the economy to deteriorate even more than is expected, you could see a weakening of the Canadian dollar. But I think that you might already have the low end of the Canadian dollar, because that's what the price action has been telling me in the last couple of weeks.
It's Bryden Teich on the Canadian jobs numbers. Once again, only 1,100 jobs added to the Canadian economy during the month of February. All of those were part-time jobs. In fact, there were almost 21,000 part-time jobs added to the Canadian economy during February. The other side of the coin, however, is that 19,700 jobs, full-time jobs, were lost.